What is the economic fear index? And should you be afraid? Hello and welcome to another KuLAB. My name is Ku. This is our laboratory for learning. Thanks for joining us for another business news breakdown. Today we're talking about something in economics called the fear index. We're going to find out what it is, what it has to do with the world economy, look at some business vocabulary, look at some business concepts, and hopefully get a better understanding of this really interesting economic tool. If you like this kind of content, be sure to like and subscribe. We really appreciate it. Let's go ahead and get started with our next KuLAB. As always, I like to give attribution to our authors. So today we're going to be looking at an article by George Glover. Okay, let's take a look at our headline here. Wall Street Fear Index creeps up as investors await Fed speakers. So an interesting headline. We have a fear index, and we'll talk about that in just a minute. This idea of creeps up. To creep up means to move very slowly. Sometimes we think of it kind of in a sneaky way, but it's just slowly moving a little bit at a time. Investors await Fed speakers. So Fed speakers in this case are the U.S. Federal Reserve. They are going to speak about whether or not they will raise or lower interest rates. If they seem to see some inflation in the United States, they will change the interest rate, and this could affect a lot of things that have to do with the United States dollar. So a lot of things are priced in United States dollars, and so that could change some economic factors. So we're going to talk about this thing called the fear index. So let's go ahead and talk about this thing called the fear index. And what does it mean? So as we look at this chart, there is an index in the United States called the CBOE Volatility Index, or VIX for short. And this is an index. It's a real-time index that tracks how much volatility there will be in the market over the next 30 days. So let's break that down a little bit. So in this case, volatility means how much up or down the prices will change in stocks, in bonds, and all kinds of investment services. So if something stays relatively straight, there's no volatility. Volatility is the going up and going down, often very quickly. So the way that they get this number is they look at the prices of S&P 500. This is the Standard 500, Standard & Poor's 500 index options. And they look at the prices of those, and there's a formula and an algorithm that kind of gives us this index in real time. Now, the important numbers to look at is the number 20. If things are down around 10 or 12, that means people think that the market will keep doing exactly what it's doing. As it starts to rise higher, around 15 and 16 and 17, it means that the market is getting very nervous. That's why they call it the fear index. The market is starting to fear some things. It starts to fear volatility. And the market doesn't like volatility. It doesn't like for things to move around. It likes to predict what's going to happen next. Imagine I told you you could double your money tomorrow, or you could lose it all. Right? You would be very nervous. That's a lot of volatility. You would have some fear. So this index tracks that kind of thing. When we hit the number 20, that's when there is very, very significant fear in the market. So just to give you some examples, in 2008, during the large international financial crisis where the world banks were falling, we had crushing volatility, and it looked like a lot of banks would go under. The entire United States banking system might fail. The fear index was around 80. Likewise, in 2019, during the pandemic, in the March of that year, in the March of 2020, when no one knew what was happening, the entire world was closing, no one could leave their nations, the fear index also hit around 80. So these are two extreme examples, but 20 is the mark-off. 20 is the point where if it starts to hit that number, there is significant fear in the market. So let's take a look and see where we're at now and why we're rising a little bit. Investors were feeling a little more on edge on Monday, ahead of a slew of speeches by Federal Reserve governors, including President Donald Trump's ally, Stephen Miran. The CBOE Volatility Index, or VIX, rose to 16.2 from 15.4 in early trading. The widely followed fear gauge tracks S&P 500 options contracts, with any reading of above 20 tending to signal relatively high uncertainty. Okay, so we talked about the fear index a little bit. Let's start breaking down these sentences. Investors were feeling a little more on edge. So on edge is an English phrase that means nervous. When you get a little bit nervous, you're on edge. You feel a little bit tight. You're a little bit worried. So the investors were feeling on edge. They were feeling very nervous on Monday, ahead of a slew. Slew is a word that describes a lot. It means usually a lot happening in a very short period of time. In this case, they're talking about speeches. So many people will give many speeches on Monday at the Federal Reserve in the United States of America. So a slew of something means a lot, usually very quickly. By the Federal Reserve governors, so these are the people who oversee the Federal Reserve in the United States of America, including President Donald Trump's ally. So in this case, ally means on the same team or supports someone. So this person, Stephen Miran, works at the Federal Reserve, and he will give a speech, and he's a friend or on the same team as Donald Trump. So he very much supports Donald Trump. CBOE Volatility Index, or VIX, so that's our fear gauge, right? That's the index that tracks it in real time. It rose to 16.2. So remember, we said anything above 15 means they're starting to get very nervous. And if it gets up to 20, that's a significant event in economics. It means the market is very nervous and there's usually high volatility, which means they could have a stock market crash, which means there's a lot of uncertainty in the market, and your money is at risk if you have it invested. Again, any reading above 20 tending to signal relatively high uncertainty. In this case, the word signal means to convey a message, to say a message. So they're sending a message about uncertainty. At 16.2, that means we're getting very nervous and we're very close to a pretty significant economic event. Miran, who was picked by Trump to join the Fed's board, will outline on Monday why he backed a jumbo half-point cut to interest rates. He's giving a speech at the Economic Club of New York. Several other key policymakers, including New York Fed President John Williams, are also set to speak today. Okay, so to break this down, this is a very quick paragraph about Stephen Miran, who is Trump's sort of hand-picked governor. He is going to give a speech why he backed this jumbo half-point cut. So jumbo means big. It's larger than usual, big jumbo. Half-point cut to interest rates. The Federal Reserve sometimes will not do anything with interest rates, let the market decide, but if the market is showing a lot of inflation, they might cut interest rates so that it's easier to borrow money. It makes getting capital a little bit easier. So a half-point cut to interest rates is pretty significant. We don't know what the interest rate cut will be. Join us in a week for another business news breakdown. But he wants a half-point cut. There will be other key policy makers. Policy makers are people who make government policy. So policies are usually laws or rules that the government has to abide by or that businesses have to use. People who make those policies, who write those policies, are going to give some speeches. The reason why we focus on what happens before those speeches is because the market likes to anticipate what might happen. If we can get some sort of idea about what might happen, we can feel less nervous. The flurry of speeches could be making the market a little more uncertain about where interest rates are headed. Futures tracking the major U.S. indexes were sliding as investors tried to figure out the future path of monetary policy. The word flurry is very similar to slew. It just means a lot of them and very fast. So a lot of speeches happening very quickly, a flurry. Futures tracking the major U.S. indexes. So in this case, futures are a financial instrument, and we're going to do a video on those specifically. But they're contracts that agree to buy or sell something, sometimes stock, sometimes bonds, at a certain price in the future. So you do this to sort of manage risk, sometimes make sure that you're safe. You can track those contracts because those contracts are bought and sold, just like stocks. So futures tracking the major U.S. indexes were sliding as investors tried to figure out the future path of monetary policy. So this means that people were a little bit nervous. They weren't making a lot of future bets because they didn't know what's going to happen in the future. So they are quite uncertain. They're trying to figure out the future path of monetary policy. Monetary means money. So trying to figure out what's going to happen with the interest rates. Usually when we talk about monetary policy, we talk about what's happening with the money. So printing new money, interest rates changing, anything that affects how we can get money, invest money, or how much money we have to pay back is monetary policy. So all in all, what we see here is we see this fear index tracking uncertainty. And in the next few days, there will be some movement on the interest rate. So that should be quite fun. I'll do another video on that, and we can see whether or not the fear index rises or shrinks. I'll go ahead and link the fear index in the description below. All right. Thank you for joining us for another business news breakdown. Today, a very quick article about a very interesting topic, I think, the fear index. Again, if you enjoyed this kind of content, please hit that like and subscribe button. And as always, this is a KuLAB. So write a comment below. Tell us what you think. Are you nervous about the future? Do you care about the interest rates in the United States? Thanks again, and I hope to see you in the next KuLAB.